Yo guys, DeadPrez here with another dividend account video. Since the last time we left off, the market has been in a steady chop while investors wait for direction. In that time, we have been adding steadily, depositing into the account, and buying these dips. Now we can go over our returns for the month and talk about each stock and how they're performing for us. You can see here for the month we're down $538, 3%. We've gained $12 in dividends, which is really nothing compared to the market loss that we've experienced in the last month. We'll go over our blue chip dividend account and then see what stocks were doing good. We have it set right now to highest gain. We can see Verizon, our number one holding, actually was holding down the portfolio after a very abysmal 2 years from Verizon. We can finally see Verizon showing some type of strength. We got Shaw, which is pretty much the Verizon of Canada. It's a monopoly. It's a phone business from Canada. Entered this position quite a while ago. It was before the Rogers deal. So I just held because of that Rogers deal. Jumped shares up 30%. So with a cushion like that, why not hold for the nice dividend? We have another stock just like Verizon. Had a really bad last kind of 6 months and now is finally showing some strength. Dominion. You can see utilities and communication kind of starting to come alive right now in the last month. We see Rio Tinto. That's surprising with iron prices the way they are and China's COVID policy to see Rio Tinto so high. And JP Morgan, banks of course are going to have a great year. Rates are rising. Rates are still high. They will continue to be high, so banks are going to continue to make great money. JP Morgan's a great buy now. Got Kimberly-Clark with the last of the green in our portfolio before we get to the red. And Kimberly-Clark is another really, really safe pick, guys. Now to go over the 5 biggest losers of the month for my portfolio. We got Apple at number 1, almost down 15%. We've seen tech in this last month over Christmas get slammed really, really hard. SPY and Qs are down big. Apple's production kind of slowing down, sales slowing down. They're trying to get out of China and into India, so turbulent times for Apple shareholders, but not too worried right now. Apple is a very strong company, big company, holds down a lot of people's 401ks. Too big to fail. If Apple fails, the whole market would fail, so there's really no reason to get scared now. Next up, we got Microsoft down 11%. Another one just like Apple, tech company down with tech. Microsoft, though, is a very, very good buy at these levels. With all the money that they make, very, very good buy here. Apple, the slowdown in iPhones is a little bit worrying, but Microsoft doesn't really have much to worry about. CVS down 10% in the month. Again, not too worried. CVS went up almost 150% in the last 2 years, 200% in the last 2 years. This slowdown in CVS isn't hurting anyone really if you've been investing for the last 2 years. So in the CVS position, I'm just free riding. CVS was the top 3 of my portfolio quite a while ago. And then after the monstrous run, I took profits on most of it. And now I just hold it in the bottom of my portfolio just for the dividend. Then we got UPS. This one actually hurts. UPS, the slowdown in the economy is hurting UPS finally. UPS was delivering packages. People were buying stuff up like crazy no matter what, but people are expecting this year, 2023, that people aren't going to be as frugal with their spending. So UPS down. I'm still liking it to round out the bottom of the portfolio at 3%. I'll still be buying. And then we got Intel, semiconductors. Semiconductors are so correlated with tech that when tech goes down, semiconductors are going to come down big. And semiconductors kind of like Apple, there's a slowdown in demand, There's not as many people going out and buying CPUs or, going out and buying these streaming setups like before with COVID. So I'm not too worried about any of these going down. I'm still going to be holding these at the percentages they're at for now. Next video, we're going to be talking about some of the plans for 2023 of where I want to take these percentages and the target percentages, but for now we're keeping everything the way they were from all the recent videos. And a lot of you guys wanted to see the REITs. I did add one more percent to my REITs, so I've been actively buying some of these REITs up, but you can see my value for a lot of I have so many REITs that I don't even have more than $25 in a REIT. I'm trying to diversify, and then we'll hold on to the winners and cut the losers. Still trying to wait for the market to stabilize in the real estate industry. I'll show you guys my top return, realty income, probably your top flight REIT. It's ticker O, probably the best REIT you could buy actually right now. We got Ventus, it's medical properties, Gladstone, industrial, Stag industrial, American Tower, another one of the best, probably my favorite stocks to buy for the year. Just for the generation, if you're trying to build generational wealth, you got to keep buying American Tower. Very safe company, safe dividend, great way to use your money. Then we got Store Capital Corp, WP Carey. Gaming Leisure has actually been my number one. This is just gambling properties. And then we can see at the bottom we have Innovative Industrial Properties. That's your marijuana properties, and it was so oversaturated that it's just been down and down and down ever since I've been buying IIPR. Still gonna be buying though. I do see marijuana, industrial kind of growth keeping on with the trend that it's been on, though the government's kind of pushing back on that. I feel like in the next 5 years we could really see the government kind of start to accept the marijuana industry and embrace it. And finally, for the activity on the account for the last month or so, since we came out with the last dividend account episode 3, we've had some nice dividends coming in. We got Grief at $4 here, small little payment from the REIT here, another REIT payment. We had a small deposit here, $100, another $184 here. Dividend from Shaw for $1.50. We had another dividend from Gaming Leisure. You can see the dividends in the REITs are starting to get bigger. Once we start adding even more and more and the account gets bigger, then you see these turn to dollars each month. We had another deposit, $105. We had a nice dividend from Dominion, $9. Nice dividend from Shell, $5. We had another deposit, $100. Another deposit, $177. We had to keep buying during this dip. Loving the dip. We had a nice dividend from Wendy's, $5. And then, let's see. We also had NextEra Energy, $2. That's a very nice dividend. NextEra has been on a tear. We had a $123 deposit. 3M had a $10 dividend. We had a $99 deposit. Microsoft with a $2 dividend. Another $70 deposit. Intel with the $15 dividend. Enbridge with the $8 dividend. UPS with the $4 dividend. And that's been it since our last video, guys. So I think around almost $100 in dividends in the last month. So helping the account stay afloat. That'll be it for episode 4 of the dividend account journey. We're gonna keep pushing along strong for 2023. Our goal for the end of the year for 2023 is to have this account at least $50,000. Hopefully you guys can follow along, trade with me, invest with me. Leave a like, comment, and subscribe if you haven't already. Thank you guys. Appreciate all you.
Welcome to New York City. Oh no, welcome to Dipset City. And thanks to Cam, I'm Harlem's new anchor man. Yes, chump, you should shake my hand. The coupe gon' make me too cocky, and I'm not gonna wanna talk to you dudes who move sloppy.